good, gang? What's good, brothers? We back with another RTB Bootcamp video. So yeah, man, we getting back in. We getting deeper into it. Pause. We getting deeper into the shit y'all need to know, man. We getting deeper into. We getting deep. Pause, nigga. It's like nah. But we getting into the strategy, like the real stuff that y'all need to know to be able to take trades and take dubs and everything. Like, let me move all this out the way. But we getting into everything now. These next couple days, you should be looking on charts, looking for these setups, hopping in on live trading. When we live trading in Discord, bro, because that's literally free game. You could catch dubs with us. If you follow me on Instagram, you can see the trade recaps, bro. We be taking those dubs on live. It's when whoever in the Discord with us be taking trades with us, and you could easily pass a funded account just taking trades with us. But regardless, today we talking about inverse fair value gaps, and this is the second part to the video because these two videos are gonna be Dorian's A+ setup and my A+ setup. Dorian and I trade a little differently. We got similar rules, but it's a little different. There's some trades I'll take, he won't take, and vice versa. But yeah, inverses are key to how we trade. Every trade we take are based off inverses, bro. That's all you need to know to be able to. You need to understand fair value gaps, inverses, and liquidity. And then daily bias and all that other shit we'll get into in later videos. But you need to understand liquidity and inverses, bro. That is a recipe for success. In this setup I'm going to talk about today, I've been back testing and forward testing it. You could do it yourselves. Y'all don't got to listen to me, bro. But I'll be back testing and forward testing this shit. And 8 to 9 times out of 10, when I see this setup, it's gonna work out, bro. It's gonna work out. And it's just like, yeah, man. You could try it out for yourselves. Y'all could go on the charts and look for this shit. Go on trade FX replay trading on TradingView, and look for it yourself in real time. The only difference between my play is it doesn't come up as often as Dorian's would because he's trading on shorter time frames. I don't like trading on shorter time frames. I just got into taking trades on the 1 and the 2 minute and the 3 minute because it's easier, especially when you trade in NQ. You don't have to risk as much as trading on the 5 and the 15. But when you trade on higher time frames, it's easier to catch plays because higher time frames have a better tell for the overall direction of price for that day. Like, you want to use the 1 hour and the 4 hour and the daily for, you want to use the daily for your daily bias and even the 4 hour for your daily bias, but the 1 hour and the 4 hour is going to show you the direction of price, and then you use the shorter time frames to catch optimal entries. That's what's gonna make the most sense. That not even make the most sense, that's like just what it is. But yeah, so for this A+ setup, bro, easy ass way to get a higher win rate. If you was to even just take this setup, I promise you're gonna have a high win rate. But yeah, so the setup I got, I'm gonna type it out for y'all. So 1 hour. If y'all niggas ain't say bless you, you a hoe, nigga. So 1 hour for value gap rejection, or if it respects, or whatever you want to say, it respects a 1 hour for value gap. And then that's the first confluence. That just blew my shit. The second confluence, 15 minute / 5 minute. If you could get both, even higher of a confluence, but 15 minute / 5 minute inverse. And then, yeah, you want it to be along with your daily bias. Daily bias. Easy setup, bro. Easy thing to spot on the charts, easy way to see it, easy thing to set up, bro. It's not too much you gotta know. If you understand fair value gaps, you understand inverses, you understand price action. It's just a simple way to have a higher win rate, bro. So let me get into it. So daily bias, talk about that because that's the first thing you're going to want to find. And we'll have a full video going into it, but the same way you know when price dips into a fair value gap, if it doesn't, going into that fair value gap is a nice tell for it to bounce off it. It's like a trampoline. It dips in and then bounces back up to the upside. And then yeah. So a fair value gap like that on a daily time frame, as we said in past videos, higher time frames hold higher precedent for price direction. So on the daily time frame, if price is dipping into a fair value gap, if it's going down into a bullish fair value gap, I would probably have a bias that it's going to go up for the day. I'll have a bullish bias. Same way if price was into a bearish fair value gap, I have a bullish bias, a bearish bias. If price took out liquidity on the daily time frame, the liquidity was swept, I would be expecting a retracement. So I'd probably have a bearish bias. If it took out liquidity to the buy side, you might have a bearish bias. And then I would go on to the 4 hour and the 1 hour to, confirm my bias. So that's what you want to look for. I'm gonna get in. There's gonna be a psychology video on confirmation bias to how it could work against you as well. But you want to confirm your bias with more confluences. The more confluences you have, the higher probability your trade is gonna work out. So say I probably won't go into the daily, but say I have a bullish bias for the day. It dips in, just like right here, it dips into this hourly fair value gap. Say it dips into the fair value gap, and say even on the 4 hour, look, 4 hour, it respects this little ass fair value gap and even dips into this big ass fair value gap. So at that point, if my bias is bullish, I'm marking out highs that I think price could target for that day. Marking out highs. Those highs are where I'm wanting price to go. So might mark out this high, depending on how price wants to move for that day. So you hop on the hour, you hop on the 4 hour, you see that it respected that. Hop on the 1 hour, it respected this fair value gap. Big moves. That means it opened right here, went all the way down, ended up closing back up here. Heavy buy, bullish pressure. Heavy tell for a bullish bias. So you see 1 hour fair value gap rejection. Check. Number one. Then you hop on the 15 minute. Perfect. You see 15 minute inverse. The candle closed above, not the wick. Fuck the wick. The wick don't mean nothing. The candle closed above. You see that? So even more tell for a bullish bias. So now when I see that, I see the candle close above, hop on the 5 minute, another one. See this candle closed above, that 955 candle closed above the 5 minute. So you have a 15 minute inverse, a 5 minute inverse, a 1 hour rejection, bullish, a bullish fair value gap rejection, and your daily bias was bullish. A plus 90% win rate setup, bro. I'm telling you. Put your stop loss below. Try to, if you want to catch a limit order. If I'm trading NQ, I'll usually catch a limit order just so my risk isn't crazy if the inverse doesn't work out. And then those highs I marked out, I'll set up right here. Them highs I marked out, I'll set up highs right here, highs right here, and then say you enter right here. It respected all of those. And then look, took out that high right here. At this point, what you want to do, you entered right here. You want to move your stop loss to where you entered at, break even. If you're smart and you're in for multiple contracts, you'll exit right here with, like, say you're in for 4 contracts, take off 2 contracts right here, close half your position. And then you might target these highs up here and see what price does. But at the end of the day, you made profit right here. And then now you're not losing no money. If price wants to go back down and say now it just wants to make it swept liquidity, now it wants to go back to the downside, you already made some money and you're good. Might not have worked out the whole way, but you caught a dub, and that's more money in your account. That's more money for you to trade with the next day. That's more of a cushion. If you take a loss, the loss might not even matter because you're still up on the week. That's all that matters, bro. Trading for tomorrow, trading for next week. Don't worry about the play working out fully, bro. Worry about securing your profits and minimizing losses, bro. But we can watch this play out. You see, dipped into the hourly. The other thing I want to talk about too, that's what I should put on that list as well. Where did I put that list at, though? Yeah, I'm tripping. But the first thing that you should find when you hop onto the shorter time frames, you want to see a liquidity sweep. The liquidity sweep will most likely happen after that dip into the fair value gap. If you see an inverse, you want to see a liquidity sweep before the inverse. You see this prominent low that it took out. Price took out this prominent low. It swept liquidity. So you want to see a liquidity sweep before an inverse for it to be valid, because liquidity sweeps and then it breaks structure to the opposite direction. That's a good tell for it to sweep liquidity, sweep that buy side liquidity. Liquidity sweeps. Liquidity is king. Remember that. But yeah, so you want to see a liquidity sweep. I'm going to say it again before you get the inverse. Look for a liquidity sweep. If you see an inverse before a liquidity sweep, it might still work out, but it's not as high of a probability. You want to see a liquidity sweep. So look. See? Price goes down. Now, say you entered and all that other shit, your shit was down here. If you didn't move to stop your stop to break even and get out half your positions here, you're cooked now. Watch, let's see what price does. It would have hit your stop loss. Now you're like, damn, it took out liquidity, and now I'm down $400 or $500. I could have made money up here. I should have got out up here, and then you all mad for the rest of the day. Secure some type of profit up here, bro. When liquidity is swept, no matter what time frame, you can be on the 3-minute time frame, bro. When liquidity is swept, I'm not gonna lie, depending on how price is moving, once it hits this shit, I might fucking move my stop to break even. Just cause you want to secure your profits, bro, and minimize your losses. That's how you become profitable, bro. You want to take high quality trades. And these trades are not always going to work out. Like I said, this is an A+ setup. This is not a 100% win rate. Even back testing it on the charts is not 100%. Like, it is going to give you a high win rate, but you need to minimize your losses as much as possible. Shit happens in the market, bro. Some random ass news could come out. Some wild shit could happen. And the price could just take a big ass red death candle to the downside, bro. And you don't want to. You want to save yourself from bullshit like that, bro. When liquidity is swept, move to break even. If it hits your break even, you already made profit, bro. That's more money in your account. If you're at 0, now you're at 100. This trade could have made you 400. You're up, bro. Be cool with that. But yeah, that's the A+ setup, dog. I ain't gonna talk too much. Make sure this shit's still recording. And you could use this on all time frames, bro. Look. You see a liquidity sweep right here. It took out that high, that play I just said that you could take. You don't gotta always. This is the A+ setup. But say you want to hop on a shorter time frame. even if there is any fair value gaps on this time frame. There's no fair value gaps to even go off of, but yeah, bro, liquidity sweeps are the key. Look, here's an example right here. For inverses, if you're not gonna use my specific time frames that I'm saying, you don't got to like look at the charts and find these shits. All you gotta do is find inverses, find liquidity sweeps, and find your daily bias, and you're gonna find setups that work out, and you're gonna back test that shit and find the best time frames that work out for you and the best times for you to make those trades. That's all that matters. You don't gotta use hourly, 15-minute, 5-minute. You don't gotta use it in the same way that I use it. Just you understand what an inverse is, understand what a fair value gap is, understand what a liquidity sweep is, and your daily bias, and that's all you need, bro. Cause look, you don't even gotta look at higher time frames for right here. Look, this 5-minute right here. You could go on the shorter time frame and see whatever. Regardless, liquidity was swept right here. Is this an hourly fair value gap? No. So this wouldn't be, for me, it wouldn't be 100% A+ setup, especially, and there's no 100% setup anyway, but especially like, yeah, it's choppy right here too. So, but regardless, this is a setup I probably would take, because the most important part of the setup, liquidity sweep, inverse, without it taking out a low before, because bro, if it takes out a low before the inverse closes, say this candle, this red 850 candle was to dip all the way down and take out this low, but it inverse, don't hop in. If liquidity is swept after the inverse, that's no longer a valid play, because the sweep of liquidity can cause a market reversal. You want to wait. This is a good play because liquidity has not been swept yet. This inverse after liquidity sweeps goes down, inverses this fair value gap, takes out this low. You could even target this low. This is probably more of a solid play than my other one too, even the A+ setup, just because it takes out all this shit down here. I don't know if this was if there was news at this time or what, but see, all you need to know, you don't gotta follow me or Dorian's setup. Understand liquidity sweeps and inverses. And bro, wait till the candle closes. Just because it looks like an inverse when there's 1 minute left, do not hop in till the candle closes, bro. And you want to see good candles, bro. Good inverses for one. Like this is not a good inverse. That little ass fair value gap, not a good inverse. Let me see. My shit about to die, so I'm about to end this shit. But yeah, bro, shit's simple. I wrote that shit down for you. All you need to know is liquidity sweeps and inverses, bro. And then target some type of liquidity to the upside or the downside, whichever direction that's in. You want it to align with your daily bias, and we'll talk about daily biases more in other videos. But yeah, it's real simple, bro. Hop on the charts, look for this shit. You'll find this shit. Make it simple. Make it make sense to you, something you'll see, because this shit happens every day. Good price action, it will happen every single day. So you don't gotta complicate it. You don't gotta try to make it make sense. What we do makes sense to you. If it don't make sense, hop on the charts. All you need to know is inverses and liquidity sweeps and daily bias. Align them shits to a bias and you're good, bro. Back test it, forward test it, paper trade it. You're good. That's all you need. It's real simple. We out this bitch, man. Hop in the Discord. Live trade with us every morning. If you want to catch some dubs, bro, get a bag, man. We out.